Okay, let's unpack this. Imagine that moment. The rhythm of a busy restaurant, maybe the focused energy of a salon, or, the quiet dedication of a delivery driver. Then the exchange, not just for the service itself, but that extra acknowledgement, right? A tip. A direct appreciation for the effort, for going above and beyond. For millions and millions of people, those tips are way more than just a bonus. They're a really vital part of their livelihood. But what if those hard earned tips, that direct recognition of great service, were suddenly treated entirely differently by the taxman? What if a major new piece of legislation fundamentally reshaped how that income is taxed, impacting not just individual paychecks, but potentially broader consumer behavior and maybe even the fabric of our social safety nets? That's precisely the fascinating and, yeah, complex situation we're diving into today. We're embarking on a deep dive into some truly significant news for tipped workers all across the U.S. It's all brought about by President Trump's recently passed One Big Beautiful Bill Act. And this isn't just some minor administrative tweak. It really represents a profound legislative shift, and it has some pretty wide-ranging implications. Our journey into this topic today is built on crucial excerpts from a variety of expert sources. We're looking at analyses like new tipped worker tax exemptions under Trump's bill. We've distilled insights from really highly respected organizations, places like the Tax Foundation. They're known for their deep dives into tax policy, and also the Yale Budget Lab, which often provides really rigorous economic analysis. And we'll also fold in perspectives from various political figures who've been right there at the heart of the debate surrounding this pretty extensive package. Our mission, as always here on the Deep Dive, is to try and cut through the noise, examine the specific provisions of this new law with, precision. We want to understand its potential impacts from every relevant angle, economic, social, political, and ultimately equip you, our listener, with clear, well-informed knowledge. Knowledge about what this truly means for the economy and for individual workers. We're going to explore not just the what of the new law, but critically the why it came about, and maybe most importantly, the so what for you.
Yeah, and what's truly fascinating here is watching how a concept that seems so, well, universally appealing on the surface, right? The idea of no taxes on tips, how it becomes incredibly intricate, almost inevitably, when it gets integrated into a much larger, sprawling legislative package.
Mm.
It's rarely as simple as a campaign slogan suggests. The details often hold the most compelling insights.
That's an excellent framing. So let's begin by unpacking the what, then the actual substance of this One Big Beautiful Bill Act.
Mhm.
What exactly is it, and what are its core features, particularly when it comes to tipped income?
Well, at its fundamental level, the One Big Beautiful Bill Act kind of lives up to its name in its sheer scale. It is a truly massive, multifaceted spending and tax package. We're not talking about legislation focused on just one thing. And its passage through both the GOP-controlled Senate and House was, well, notably narrow. Which in the world of politics, that's usually a strong indicator of just how contentious and frankly polarizing this bill really is. It barely scraped by. Suggests deep divisions even within the majority party and certainly across the aisle. So while our deep dive today is really focused on these tipped income tax changes, it's vital to remember they're just one piece of a much, much bigger puzzle.
Right. And the specific piece of that puzzle, the provision that directly impacts millions of tipped workers, it's described as creating limited and temporary tax exemptions for tips.
Yeah.
It feels important to emphasize those two words, doesn't it? Limited and temporary. It's definitely not a blanket permanent exemption.
Precisely. Those terms limited and temporary are absolutely crucial for understanding the scope and the future of this policy. Let's dig into the limited aspect first. The bill allows individual workers to deduct up to $25,000 in tips annually. But importantly, it's from their taxable income.
Okay, so not a credit. It reduces the income that's taxed.
Exactly. To be clear, this doesn't mean a flat $25,000 off your total tax bill. Instead, that amount is removed from the income figure that federal taxes are actually calculated on. So for the vast majority of tipped workers, this means up to that $25,000 threshold, those tips will effectively become federal tax-free. Now, any tips earned above that $25,000 mark, those will then be subject to federal taxation just as they were before the bill.
Right.
So for instance, a server earning $20,000 in tips, that entire amount could become federally exempt. But for someone earning, say, $30,000 in tips, the first $25,000 would be exempt, and the remaining $5,000 would still be taxed.
That's a significant chunk for many people. But here's where it gets particularly interesting, maybe a little complicated, because the legislation also includes a specific cap, right? Designed to preempt a very particular concern that actually popped up during the campaign. What about the really high earners?
Yes. This is a critical nuance. It's kind of a testament to how tax law often tries to anticipate and close potential loopholes. The bill stipulates that if a worker earns more than $150,000 a year in total income, and that's key, from all sources, not just tips, then their tipped income will begin to be taxed. The exemption effectively phases out or doesn't apply in the same way.
Ah, okay.
Garrett Watson of the Tax Foundation shed some light on this. He explained that this higher income cap serves to, quote, carve out some of the very high earners who may be incentivized to recharacterize their income tips inappropriately.
Recharacterize. So pretending salary is tips.
Basically, yeah. This was a significant worry among tax policy experts and even political strategists during the campaign. The concern was that under a blanket, universal tip exemption, individuals who are not traditionally tipped workers, think high-salaried professionals like hedge fund managers, lawyers, maybe consultants, getting big bonuses stuff, so they might try to reclassify parts of their compensation as tips to dodge significant federal tax liabilities.
Wow, okay.
So this $150,000 cap acts as a direct safeguard against that kind of, well, egregious tax avoidance. It tries to ensure the primary benefit of the exemption stays mostly with the actual service industry workers it's supposedly intended for. It's kind of like saying, this benefit is for people earning a living from tips, not for those seeking a tax shelter.
That certainly seems like a sensible guardrail to put in place. But beyond just the income thresholds, there's also a rule about what kind of tips actually qualify, isn't there? It's not just any tip for any service that gets this treatment.
Absolutely correct. The legislation restricts these tax-free tips to workers in an occupation which customarily and regularly receive tips. Now, on the surface, that sounds straightforward, right? We immediately think of restaurant servers, bartenders, hairdressers, valets.
The usual suspects.
Exactly. But here's a catch, and it's potentially a significant one. The bill's text does not provide a definitive list or a clear definition of these jobs individually. As Garrett Watson articulated it, quote, it will ultimately fall, at the end of the day, to Treasury and the IRS administrators to make this consistent with the language.
Ah, so more regulations coming.
Definitely. This ambiguity is quite significant because it leaves a considerable amount of discretion to those federal agencies. For instance, what about gig economy workers getting tips through apps? Are those customary and regular in the eyes of the IRS?
Good question.
Or what about professions where tipping is maybe emerging, or less traditional roles? Until the IRS and Treasury Department issue really comprehensive guidance, there's going to be a degree of uncertainty for both workers and businesses. That guidance will be absolutely crucial for clarity, defining the precise scope of who qualifies and who doesn't. It could impact a broader range of service professions than we initially think, or conversely, it could be defined more narrowly. It's definitely a point for future interpretation, maybe even disputes.
And you mentioned earlier that this whole thing is also temporary. That seems like a big caveat. How long do these exemptions actually last, and what does that imply for long-term planning?
Yeah, if we really connect this to the bigger picture, the temporary nature of this provision is a profoundly significant detail. It hints very strongly at future political debates and, potential policy shifts down the road. The law, as it was passed, is set to completely phase out at the end of 2028.
2028.
And this date is, well, conspicuously near the end of Trump's presidency, which suggests some strategic timing might be involved. What this means is that these tax exemptions are not permanent fixtures in our tax code. They will simply expire. Poof, gone. Unless they are explicitly extended or maybe reenacted by Congress at a later date.
So it creates a kind of cliff.
Exactly. It creates what we call a cliff edge for workers and businesses. For workers, it introduces a level of financial uncertainty. Building long-term savings or making major purchases becomes inherently riskier when a tax benefit has this ticking clock counting down. And for businesses, particularly in the service industry, it complicates long-term planning around labor costs and pricing strategies. Do they budget for potential tip decreases or needing higher base wages come 2029? It's a real question. And this temporary status also makes the policy a really powerful political bargaining chip for future administrations or Congresses. They can either champion its extension or conversely just let it lapse, depending on the political winds and economic priorities at that time. It basically transforms a tax benefit into a tactical legislative tool.
So it's definitely not a done deal forever. More like a test run, or at least a policy with a very clear expiration date, leaving a lot of room for future political maneuvering. That raises a crucial question, though. Why this particular policy, and why was no taxes on tips such a potent campaign promise in the first place? Let's dive into the why.
Well, the genesis of this idea is rooted firmly in the recent political campaign cycle. No taxes on tips wasn't just some passing comment. It was a very heavy, frequently reiterated campaign promise for President Trump during the 2024 presidential race. It was a talking point he consistently emphasized, and it seems clearly designed to appeal directly to those millions of workers in the service industry who are, a significant voting bloc.
And there's that specific, almost anecdotal origin story for the idea, too, isn't there?
Yes, there is. And it's kind of a classic example of how personal anecdotes can be leveraged really effectively in political messaging. Trump himself revealed back in June that he got the initial spark, the idea, from a conversation with a Las Vegas tipped worker.
Hmm. That narrative choice is powerful, right? It personalizes the policy, makes it sound like it came directly from the everyday experiences of the people it's meant to help, rather than being cooked up by policy wants in D.C.
Makes it relatable.
Exactly. And what's even more intriguing from a political strategy perspective is that by August, former Vice President Kamala Harris also began campaigning on eliminating taxes on tips. This remarkable sort of bipartisan echoing shows that for this specific policy idea, there's potentially broad appeal, cutting across traditional party lines, even if the larger legislative package it got wrapped into does not have that same appeal. Both major parties clearly saw a political benefit in addressing this issue for tipped workers. Okay, so understanding the origins and the legislative mechanics, what does this all mean for someone actually working today? When could they realistically expect to see this change reflected in their income, in their paycheck?
Well, according to Garrett Watson at the Tax Foundation, tipped workers could potentially see their federal taxes shrink as soon as later this year.
Yeah.
However, and this is an important caveat, the precise timeline is heavily dependent on the speed of the IRS and Treasury Department.
Mm.
They need to issue that necessary detailed guidance we talked about earlier.
Right, the definitions and rules.
Exactly. Until those regulations are formalized, it's difficult for employers or workers to make definitive adjustments with confidence. But once that guidance is out, the financial impact for many should be fairly immediate. Watson anticipates that, quote, especially going into next season, folks will see that adjustment in their taxes and a potential refund for any withholding on that tipped income.
So maybe lower withholding or a bigger refund next spring.
That seems to be the expectation. Either immediate relief through adjustments to regular paychecks, or maybe a larger refund when annual taxes are filed.
That's a tangible, immediate benefit for a lot of folks who really rely on this income. But as with any substantial piece of legislation, especially one that gets labeled a massive spending and tax package, there are always going to be widely divergent perspectives on its true impact. Who genuinely benefits from this, according to different experts and their analyses? Let's unpack these contrasting views.
Yeah, this brings us to a fundamental question. If the overarching goal is really broad relief for tipped workers, how effectively does this specific $25,000 threshold actually achieve that? Garrett Watson from the Tax Foundation offers a relatively optimistic assessment regarding the exemption's reach. He firmly believes that the $25,000 annual exemption, quote, would cover the majority of individuals earning tips in the United States.
The majority. Okay.
From his perspective, drawing on data about typical tipped income levels, he sees this as pretty generous for most workers who predominantly rely on tips for their livelihood. And he maintains, as we discussed, that the $150,000 total income cap is a crucial and positive carve-out. It effectively prevents those high earners from recharacterizing their income tips inappropriately. So for Watson, the design of the policy seems reasonably well-targeted and genuinely beneficial for the typical average tipped worker.
Okay, let's pivot now to a contrasting viewpoint, one that really challenges that notion of broad benefit. Martha Gimbel, she's the executive director at the Yale Budget Lab and also a former Biden administration official, offers a very different and frankly more critical analysis. Her view immediately raises the question, if tipped work is such a small fraction of the overall labor market, how significant can its aggregate impact really be?
Indeed. Gimbel presents a crucial counter-narrative here, shifting the focus from the individual worker to the broader economic landscape. Her primary point of contention is that tipped work is a really small sliver of the labor market. She estimates it constitutes about 2.5% of all employment, just 2.5%.
That is small, relatively speaking.
It is. So while the policy undeniably matters a great deal to those directly affected from a macroeconomic perspective, she argues its overall impact on American workers and the national wage landscape just won't be as significant as maybe some of the campaign rhetoric suggested. It's simply because the policy, by its very nature, applies to a relatively tiny segment of the entire workforce. It's a targeted benefit, definitely not a widespread economic stimulus.
And it's not even all of that 2.5% who will feel a tangible financial benefit, according to Gimbel's analysis, is it?
That's a critical refinement of her argument, yes. She emphasizes that very low-income Americans are not going to benefit from this,
Why not?
largely because they already have little to no taxable income.
Yeah.
To elaborate, if your total income, including tips, is already below the standard deduction or other thresholds that trigger federal income tax liability, well then a deduction on a portion of your income won't actually change your tax bill because you're not paying federal income taxes to begin with.
Ah, I see. You can't get a deduction benefit if you owe zero tax anyway.
Precisely. You're essentially already receiving the benefit of not being taxed on that income. Therefore, according to Gimbel, the true beneficiaries are not the lowest earners. Instead, she argues, what you are largely seeing is that this provision will benefit people who are in the upper middle income brackets.
Mm.
These are the workers whose tipped income, when combined with maybe other earnings, would have pushed them into higher taxable brackets. For them, the $25,000 deduction will actually make a tangible difference to their federal tax liability, allowing them to keep more of their earnings.
And she takes this a step further, suggesting that the benefits might actually extend beyond just the workers themselves, creating broader economic ripple effects.
She does, and this is where her analysis gets particularly insightful regarding potential shifts in economic behavior. Gimbel posits that both these middle-class tipped workers and, quite interestingly, their employers will reap the most benefits and may take advantage of the new tax exemption. She offers a compelling illustrative example. She says, let's take a hairdresser.
Okay.
It would be very plausible to me, she says, that they might lower the cost of a haircut, but say that they expect the tips to go up.
Interesting. So shift the burden onto tips because they're now tax advantaged for the worker.
Potentially, yeah. It raises a fascinating point about the possibility of shifts in pricing models and, crucially, tipping culture itself. If tips become tax-free for workers, maybe customers feel more generous, knowing their entire tip goes directly to the service provider without federal taxes taking a bite. That could incentivize larger tips. Conversely, businesses, understanding this new dynamic, might subtly or overtly adjust their pricing, maybe lower base service fees, while explicitly encouraging, or implicitly relying on, higher tips to compensate their staff.
Creates a whole new incentive structure.
It really does. As Gimbel cautiously notes, we'll see in years to come if that happens, but it's certainly an intriguing economic dynamic to watch unfold.
But for Gimbel, this whole no tax on tips provision, even though it grabs headlines, really can't be viewed in isolation. She emphatically stresses that it has to be understood within the much broader context of the entire bill. And her assessment of that broader bill is, well, frankly, pretty stark.
Yes, her core argument is that when you assess it in its entirety, the One Big Beautiful Bill Act is, in her words, a really regressive bill and also incredibly expensive. She supports this with significant fiscal impact concerns, projecting that the GOP's massive legislative package would add trillions of dollars to the country's debt.
Trillions. Wow.
Yeah, trillions. This isn't a small increase. We're talking about a major escalation in national debt over time. And that carries profound long-term implications for the nation's economic health, potentially affecting everything from inflation and interest rates to the financial burden passed on to future generations. It's not just about the spending side, it's about whether the tax cuts and spending increases are adequately offset by revenue or other cuts, and her analysis suggests they are not.
And the human cost, according to some governmental analyses she cites, is equally, if not more, concerning.
Absolutely. Gimbel highlights specific and quite profound impacts on vulnerable groups. She draws attention to a government analysis predicting the law will strip health insurance from more than 10 million Americans over the next decade.
10 million?
10 million. Primarily due to significant cuts to Medicaid. And Medicaid, for listeners who might not know, is that critical federal and state program providing health coverage to millions of low-income Americans, children, pregnant women, the elderly, people with disabilities. A cut of this magnitude means millions could lose access to essential medical care. That could lead to increased uninsured rates, greater financial strain on hospitals, and potentially worse health outcomes for vulnerable populations.
That's huge.
It is. And she also underscores the negative impact on SNAP, that's the Supplemental Nutrition Assistance Program, what most people know as food stamps. It provides vital food assistance to low-income individuals and families. So these aren't just minor tweaks to federal programs. These are significant reductions in the core social safety nets, supporting millions of the nation's most vulnerable citizens. It really raises critical questions about societal priorities.
Representative Stephen Horsford, as you mentioned earlier, certainly didn't mince words on this. He called it a Robin Hood in reverse scenario. That's a very powerful and deeply polarizing image.
He did. And it's an analogy that really encapsulates the profound ideological divide this bill seems to represent. Rep. Stephen Horsford's statement was unequivocal. He said, "There is no spin for the human suffering they're causing," referring directly to those Medicaid cuts. His analogy, this is Robin Hood in reverse. And Republicans would be wise to remember that they won't have the last word here, the American people will on Election Day, frames the bill as fundamentally redistributing wealth. But not from the rich to the poor, as the original Robin Hood story goes, but in the opposite direction.
Benefiting the wealthy at the expense of the poor.
That's the implication. It suggests a policy that benefits the wealthy at the expense of the economically disadvantaged, striking right at the heart of what many believe government's role should be in society.
And Gimbel provides the hard data to sort of back up that Robin Hood in reverse analogy, doesn't she? Detailing the stark income disparity in the tax cuts and losses.
Yes, and this raises an extremely important question about the distributive effects of such a large omnibus bill. How does one provision, like the tip exemption, which seems beneficial to some, interact with the broader financial shifts affecting different income brackets? Gimbel's specific data points are really compelling, and they paint a stark picture of this disparity. She states that, quote, if your income is above $3.3 million, you get a tax cut of over $118,000.
$118,000 cut for the very top earners.
A truly massive tax cut for the wealthiest individuals, a significant increase in their disposable income. Now, in stark contrast, she notes that if you're in the bottom quintile, meaning the lowest 20% of earners, once S&AP and Medicaid cuts are taken into account, on average, you're losing $560.
Losing money, on average.
Losing money. So while a small part of the bill does offer this tax exemption on tips, benefiting some middle-income workers, the overall effect, when you factor in those substantial cuts to essential social programs, the net result, according to this analysis, is a financial loss for the lowest income brackets, coupled with a substantial gain for the very top earners. This is precisely why she concludes that the One Big Beautiful Bill Act is both incredibly expensive and, in its aggregate impact, a really regressive bill.
Wow. That certainly paints a very different and far more complex picture of the overall impact than just focusing on the tip exemption alone. This leads us perfectly into the political battleground surrounding this bill. It clearly seems to be far more about the entire package than just the tips provision.
Absolutely. This dynamic is really a prime example of how individual policies, even ones that might seem popular or have broad appeal, are frequently used as leverage. They become pawns within much broader and more contentious legislative battles. While the specific idea of no tax on tips enjoyed some genuine bipartisan nods of support, the One Big Beautiful Bill Act, as a whole, faced near-universal opposition from one side of the aisle. It really underscores the complexities of legislative strategy.
Yeah, here's where the politics of this particular bill become a really fascinating study in legislative strategy. You had prominent figures from both sides of the aisle, Republicans like Senator Ted Cruz from Texas and Representative Vern Buchanan from Florida, but also Democrats like Senator Jackie Rosen from Nevada and Representative Stephen Horsford, also from Nevada, all publicly supporting the idea, the concept of no taxes on tips. Yet, despite the seemingly bipartisan appeal for that specific policy, Democrats in Congress universally oppose the package as a whole. What explains that disconnect? How does that work?
Well, the universal Democratic opposition to the overall package, despite some members liking the tip policy idea, largely stemmed from their really profound objections to those significant cuts to Medicaid and other social safety nets contained within the broader bill.
So the other stuff was just too much to swallow.
Exactly. This highlights a crucial point in legislative strategy. Sometimes a popular individual policy is intentionally embedded within a much larger omnibus bill, like a Trojan horse, almost. A bill that also contains provisions deeply, fundamentally unpopular with the opposing party. For Democrats, the severe predicted impacts on healthcare specifically, that government analysis forecasting the law, could strip health insurance from over 10 million Americans due to Medicaid cuts. Those impacts were simply too grave, too fundamental a threat to social welfare for them to overlook.
It overshadowed the tip part.
Dramatically. It dramatically overshadowed any appeal of the relatively minor tip tax exemption within the context of the entire bill. It became a question of trade-offs, and for many Democrats, the cost to healthcare access was just unacceptable.
And Representative Stephen Horsford really seemed to epitomize that opposition, didn't he? He tried to address the temporary nature of the tip exemption itself, but also spoke really forcefully about the deeper implications of the bill.
He certainly did. Horsford's powerful statement, "There is no spin for the human suffering they're causing," speaks directly to the profound and tangible impact he saw on those Medicaid cuts. It's really a moral argument against the bill's broader framework. And he also made a significant legislative effort to improve the no tax on tips policy itself. He actually offered an amendment specifically designed to make the no tax on tips policy permanent instead of temporary.
Ah, so he wanted to fix that temporary aspect.
Exactly, which shows that while he supported the idea of relief for tipped workers, he also recognized the inherent precariousness of its temporary status and sought a more enduring solution for those workers. However, his amendment notably failed. It didn't pass, which kind of illustrates the rigid, maybe all-or-nothing nature of this particular legislative package as it moved through Congress.
And then, on the complete other side, you have figures like Representative Vern Buchanan. He saw this whole thing as a clear victory, fulfilling campaign promises for his constituents.
Precisely. Buchanan, in stark contrast to Horsford, celebrated the policy's passage. He stated, quote, "The one big, beautiful bill act is the definition of promises made and promises kept." This highlights the vastly different narratives and priorities at play here. For one side, it's about fulfilling core campaign promises, delivering specific tax relief, maybe enacting a broader vision for the economy. For the other side, it's about protecting essential social programs, ensuring what they see as an equitable distribution of resources, and preventing policies they view as regressive, policies that disproportionately harm the vulnerable.
Two totally different worlds.
It really underscores how individual policies, even ones with some bipartisan appeal on the surface, can become powerful focal points within much broader, deeply contentious legislative battles, ultimately reflecting fundamental disagreements about the role and priorities of government itself.
So, okay, after all this discussion about what the bill is, why it passed, and these widely differing views on its overall impact, let's get down to the really practical side of things. What should you, as a tipped worker listening right now, actually do? What's the immediate practical guidance you should be looking for?
Right. The most immediate and absolutely critical piece of advice, according to Garrett Watson of the Tax Foundation, is for tipped workers to essentially wait for more guidance from the IRS and the Treasury Department.
Patience is key for now.
Patience is key. As we discussed, the bill itself is vague on defining an occupation which customarily and regularly receive tips. The IRS and Treasury are the agencies responsible for issuing the clarifying regulations, the notices, the FAQs, the detailed instructions that workers and employers will need to follow to properly implement this new law. Without that official guidance, acting definitively carries risks, risks of misinterpretation or noncompliance. So waiting for that official word is really the first step.
But, okay, once that guidance is released, once we actually have that clarity, what are the immediate steps a tipped worker could consider taking to actually feel this change in their pocket?
Well, once the new guidance is published and it's clear, there are generally two main options for workers. Firstly, tipped workers could potentially update their W-4 withholdings to reflect the newly tax-exempt tips.
The W-4, right, that form for employers.
Exactly. Your W-4 is the form you give your employer that dictates how much federal income tax should be withheld from each of your paychecks. By adjusting it, you could potentially see less federal tax withheld from your current pay, which effectively increases your take-home pay sooner. You get the benefit spread out over the year.
Okay, option one.
Alternatively, option two, workers can simply wait for a refund when they file in the spring. This means they just continue with their current withholding levels throughout the year, and then they claim the exemption when they file their annual tax return. This could result in a larger lump sum refund check at tax time. The choice often just comes down to individual cash flow preferences, more now or more later.
And what about tax software? Most people use TurboTax or something similar. Given the complexity here, is that going to be a helpful tool, or could it maybe add another layer of confusion?
Watson anticipates that a lot of folks will use software for their tax prep, which is pretty standard these days, and he expects that this will be quickly incorporated into next year's filing season and will be something that's asked for within the software's prompts and questions.
So the software should handle it.
That's the hope, and usually these major platforms are pretty quick to update for significant federal changes. It should simplify the process for many. However, he does add a crucial caution. But that's always something to watch for as well, just to make sure it's properly accounted for.
Double check the math.
Exactly. It's always wise to review any auto calculations the software makes and just ensure your specific situation is accurately reflected before you hit file.
Okay, and this next point sounds like a really, really important detail for our listeners, especially for those who might hold multiple income streams. So, what does this all mean for you if you're a tipped worker right now and maybe you happen to hold more than one job where you receive tips? What should you be looking out for specifically?
Yes, this is an absolutely critical point that Garrett Watson specifically highlighted, precisely because, as he notes, many tipped workers hold multiple jobs. It's very common. He explicitly cautioned these workers that the $25,000 limit we've been discussing is a total annual limit. It applies across all sources of tipped income combined.
Not 25K per job.
Definitely not 25K per job. He stressed only $25,000 of their annual tips will be tax-free, even across multiple tip jobs. So to give you a concrete example, let's say you work at a busy restaurant part-time and you earn $15,000 in tips there. And then maybe you also work weekends at a salon and earn another $15,000 in tips there.
Okay, so $30,000 total tips.
Right, your combined total tips are $30,000. You cannot claim $25,000 as tax exempt from the restaurant job and another $25,000 from the salon job. Your total tax exempt tips from all sources combined cannot exceed that single $25,000 annual limit. The remaining $5,000 in this hypothetical scenario would still be subject to federal taxation.
That is super important to track if you have multiple gigs.
Absolutely crucial. It's a very important detail to keep in mind for budgeting, for financial planning, and especially for ensuring accurate tax filing next year. Don't accidentally overclaim the exemption.
Wow, what an incredible deep dive we've taken here. We've unpacked not just the specific temporary tax exemption for tips, its thresholds, its conditions, its limitations, but we've also really delved into its intended and maybe unintended consequences. We've examined the profound political currents that shaped its passage as part of this much larger and often very controversial bill. It seems clear that while the idea of tax-free tips has this broad, almost intuitive appeal, its actual implementation within the One Big Beautiful Bill Act presents a far more complex and nuanced picture, with very different impacts depending on your income level, your reliance on tips, and crucially, your connection to other government programs affected by the rest of the bill.
Yeah. And knowledge, in its truest sense, is most valuable when it's not just understood in isolation, right? But when it's contextualized and applied to the real world. This deep dive really shows how a single policy provision, even one that seems kind of straightforward on the surface, can be viewed through so many different lenses. From its direct financial impact for a specific segment of the workforce to its broader economic and social implications for the entire country. And the starkly varying perspectives from respected organizations like the Tax Foundation and the Yale Budget Lab really underscore the critical importance of looking beyond the headlines, of truly trying to understand the full context and potential ramifications of any major legislative change like this.
We certainly covered a lot today, from the genesis of a campaign promise rattling around in Las Vegas to the intricate details of tax law and its potentially profound societal ripples. We truly hope you feel much more informed about the intricacies of this new legislation and what it could mean for you or perhaps someone you know. So, a couple of things to think about as we wrap up. As this policy unfolds and that 2028 deadline eventually approaches, how might the definition of customarily and regularly received tips evolve? Especially in our changing economy, maybe with the rise of new forms of service or the gig economy, and what new forms of income might emerge trying to seek similar tax considerations down the line. And also, given those contrasting views on who truly benefits from this entire bill, how might the American people indeed have the last word on Election Day, as Representative Horsford suggested? How might voters shape the future of not just tax policy, but maybe the very foundation of our social safety nets? Lots to consider. What stands out to you from this deep dive? We'll catch you on the next deep dive.